Firms are scrambling, not because they've been craving eggs from a late night diner, but because the PCAOB has been in the back kitchen cooking, sending out news and updates left and right. I never thought I'd live to see the day where the accounting profession is moving so fast that I can't keep track of it, but indeed, I have. And if you're watching this and starting to wonder, where's Chris? He's fine. He's not sick. He's not stuck in traffic. Chris Vanover is currently somewhere in Europe, almost certainly eating a croissant. He's about to post on LinkedIn with the caption, "What baked goods from Europe can tell us about quality management in American CPA firms?" We love him. He's earned the trip. I only cried a little bit when I found out I was flying solo for the biggest QC 1000 episode we've done all year. But the good news is I didn't come alone. I brought backup, real backup, the kind that makes Chris's absence feel less like a loss and more like a scheduling upgrade. Because today might be the last chance your firm has to get ahead of this before the clock runs out. So with that being said, let's get qualified. Welcome to a special edition of Qualified Opinions, and welcome to everyone joining us live in the room today. Quick note before we start, this is being recorded live, audience and all. The polished version, graphics, lower thirds, the works, that comes later. So today you're getting it raw, and if you're watching this on playback, everything I just said makes absolutely no sense, so please disregard. Here's why we're doing this one. We started warning firms about QC 1000 years ago. Some of you got a jump start, but most of you let it fall out of the news cycle, which is totally understandable. This year, the conversation picked back up, then busy season hit, and then everyone started speculating about the PCAOB and what they might do next, and it just got pushed aside again. Now, the clock to start is approaching zero, and when we noticed that realization had firms scrambling, we climbed back on our soapbox one more time. So today we brought the two people at CPAClub who live this stuff. First, Brian Yujuico. Brian is the guy who I'm fairly convinced has the actual text of QC 1000 memorized well enough to recite it at a dinner party, which is either extremely impressive or a little concerning, depending on what the dinner party is about and who's there. He spent the better part of the last 2 years helping firms of every size actually build these systems, not just talk about them. And of course, Connor Crow. Connor has been picking up so many industry awards and recognitions lately that we're seriously discussing knocking down the wall at his home office because his current wall is at capacity and it's starting to look like a shrine. He's taking this from the wall that still has some space left. But all jokes aside, Connor's the person firms call when they need a superstar to make their audits feel more like a value add and less like a termite infestation. So, Brian, Connor, welcome. We've got a lot to unpack, and everything on you both can be found on LinkedIn, of course. So, let's just get right into it. First, I want to talk about the timeline and everything that's been happening. Our January episode, we had Brian on, that covered the QC 1000, and the structure, the roles of it all, the adoption. But since then, things have actually started moving. We weren't sure at that point where things were going to be headed exactly. We just were speculating. So I need to catch up. I think everyone else probably needs to catch up as well. So, guys, walk us through the big moves at the PCAOB since January. Like, what's actually been happening between Q1, early Q1, and now?
Yeah, I'm happy to jump in as the new face here. Brian, Drew, glad to be here and excited for my first Qualified Opinions appearance. So, yeah, like you said, a lot has happened over the last few months. I'll try to quickly go through kind of a rundown of the timeline. But really, I'll kind of start with end of March when the PCAOB requested public comment on its strategic priorities. So with the new board coming in and really trying to take a refresh look at how the PCAOB operates, they sent out that request from stakeholders to really see what the future of standard setting may look like. And like I said, there's a lot of activity here, so I'll try to keep the timeline in order. Some of this is going to bounce back and forth, but then when you kind of jump ahead to the end of May, the PCAOB actually launched an Inspections Modernization Council. So this is them trying to elicit outside voices, so investors, audit committee members, CPA practitioners, people from varying backgrounds. And really, this advisory board was set up to help modernize the inspection process. Who would have thought the Inspections Modernization Council would be trying to do so? But that was the main goal there, and it really just shows how the PCAOB is trying to get external input on a lot of their initiatives going forward. Moving ahead into early June, they actually released the contents of the comment letters that they received. So about 70 comment letters were received from that end of March request, and 26 of them independently brought up QC 1000. And so this is clearly something that's been top of mind for CPA firms and just people in the industry at large. And so kicking off of that, really just 4 days after that, so on June 9th, the PCAOB released a supplemental proposal with 9 targeted amendments to QC 1000. And so that has been on the docket. I should say for about 30 days, there was a comment period for firms to respond to. So that ended on July 9th. So at the time of us recording this, I hope you were able to get your comment in if you were wondering what those amendments were and wanted to comment on them. We'll obviously talk about that here later. And then really the last big thing that the PCAOB has done is on June 25th, they launched a firm consultations process. And so this is just a formalized way for firms, for practitioners to get informal staff viewpoints on some of the technical and difficult things they're seeing in their field. And that'll all run directly through the Office of the Chief Auditor. One of the things that I would just mention is we're still unsure what the response times and really what that process will look like because it is so new. I will note, though, that the day after they announced this firm consultations process, they also announced that the Chief Auditor, Barbara Vanek, departed the PCAOB. So very much a watch this space as to how that firm consultation process evolves, especially considering that they have not named a full-time replacement at this point for that role.
So a lot of movement happening there. And I know you mentioned, of course, the PCAOB's request for comment. And so I know CPAClub had our own comment letter that got cited actually directly in the PCAOB's release. I believe you both were contributors to making that letter happen. So what exactly was it that, from our side, we were asking for and why we thought these things were important?
Yeah, I can take this one since I haven't said a word yet, but maybe I should first say thanks, Drew, for the intros there. But no, yeah, we were one of those. What was the number, Connor, on how many firms?
70.
70 firms, and it's definitely a change in the direction that the board is taking and trying to really listen to the key stakeholders, including the CPA firms. So we submitted a comment letter along with this other 70 others, and it was pretty cool to see that in the supplemental release and the proposed changes that we were cited on a few of those points directly with, there was some that were cited more than once, but we were cited with a lot of the big 4 firms, top 10 firms, so which was pretty exciting for us. And so, we had a lot of the same commentary. So, the biggest thing was there are other quality management standards out there already, AICPA, SQMS, international quality management standards. And I think the biggest point overall was, why can't the PCAOB align more closely with those existing standards, which were required to be implemented by firms, 2-3 years now. So that was really the biggest ask, and many firms had the same point of view. A couple specific points from CPAClub's letter. We did encourage the board to keep the implementation date. We know last year there was a deferral where it was originally planned to be due and implemented by December 15th of 2025. And then the board decided to defer it to December 15, 2026. And with the changes in the board, there was a lot of lobbying to keep or defer it and defer the date indefinitely. However, we were strong proponents to keep the date. We felt like, there's been 2 years, and then especially with the AICPA's quality management standards, which firms have been, trying to implement for over 3 years now, that it's just too important of a matter in the industry, in the A&A industry, to keep deferring something as important as developing a new and improved system of quality management, quality control, whatever you want to call it. So that was one of the big items of keeping the date, and that sounds like it'll be the case to December 15, 2026 isn't moving, even though there's still some outstanding proposals and comments to be taken into consideration. And then maybe, a couple other things where we commented on the EQCF. It's mainly in engagement quality, kind of independent board for larger firms, so those with 100 plus issuers. We were proponents of keeping that, just because it gave kind of an independent, structured perspective that firms might not have. So we were proponents of that. I think we were an outlier there, but it was cool to see that we were singularly quoted. But I think that's ultimately proposed to be rescinded overall. So that's a bummer, but pretty cool to see that they actually listened to us and they quoted us singularly. So pretty cool. And then one of the last things which a lot of firms were on board with was the evaluation date. So the original QC 1000 said every firm had to do an evaluation as of September 30th each year. We found that was going to be very difficult for a lot of firms, just because firms have different peer review end dates. Their firm fiscal year end dates are different, and so to make everyone do September 30th would have been quite difficult. A lot of staggering of different dates. So we proposed that firms should be able to choose their evaluation date. Hopefully they can align that with other quality management standards like ISQM, SQMS, as well as their own peer review end dates. So that one was heard, and I think that's in the proposal to be aligned where firms can choose their own date.
So obviously, not everybody's going to be on the same page all the time, right? So everybody's got their own interests that they're approaching that with. So I did see, and you correct me if I'm wrong, but the board members put out individual statements on the same release, and perhaps they don't all necessarily read the same way. What's your sort of take on what that tells us?
Yeah, I'm happy to take that. I know, Brian, you've kind of been chatting, but yeah, I think this goes really at the heart of the fact that, there is some differing viewpoints out there on how to best implement and structure these standards. To your point, Drew, 4 different board members kind of made comments. Some of them, including the chair and one other board member, kind of spoke directly in support of the proposed amendments. However, a couple other board members, phrased their official statements differently in terms of, trying to make this a more sustainable course and inviting broader stakeholder perspectives throughout the process. So, it just is an indicator that if the board and, everybody that was trying to set these standards were all on the same page, you would expect kind of a joint statement from the chair and the board, and that was just not the case. So I think there are still some differing viewpoints out there. One thing I'd like to just really kind of hammer home that, Brian had mentioned, and I do think that this is something that is relatively unanimous, at least from the standard setters themselves, is the fact that QC 1000 is here and it's not going away, and they're not going to give additional deferrals. I think they said that 1-year deferral was the extent of what they were doing, and they've already said that that's it. So I know we're going to be talking about all the potential changes and all the back and forth here, but at the spirit of everything here, QC 1000 is going to be required to be implemented December 15th, 2026. Exactly how that looks and what you're building towards, there may be some changes here and there, but at its core, QC 1000 is still here.
So I'm glad you kind of are going down that lane, because I think what's useful, obviously, this is a lot of stuff at the macro level, talking about the PCAOB, their mindset, their mentality. But when it comes to like getting into QC 1000 specifically, obviously SQMS, AICPA, that got in. As we're finding out and learning, I believe from just talking to people in the field, some people are even still slacking on that front. But getting into QC 1000 specifically, in plain English, what is QC 1000 and how is it different from your QC standards that firms have just been using for the last 20 years? Is this just I think there's a lot of people that believe it's just a bureaucratic thing that happens that just puts molasses on firms or just adds additional burden. So what makes this different than what firms have been doing?
Yeah, I've never heard that put molasses on firms, but sounds about right when it comes to accounting standards. So plain English, I think I would just consider QC 1000 or any new quality management standard as basically what are your checks and balances. And I was going to say internal controls, but that's not plain English. But think about your checks and balances within your firm that allow you to perform quality engagements or do quality work and be in compliance with laws and regulations. So when you think about it, I guess what's a good analogy? Think of like a car company like Ford, right? They have quality assurance, QA, where they want to ensure that their cars are being made of the highest quality. And there's also laws and regulations that they have to abide by. And so they need to have certain checks and balances or internal controls. Sorry to use accounting speak, but I presume most of our audience are going to be accountants by nature. So think of that as a car company. What are their internal controls to ensure that they're building quality vehicles, that they're not going to go out and crash and burn and, come up with lawsuits from, the government for not meeting certain requirements on emissions, things like that. So that's, plain English, how I like to put it. And maybe I'll put a different twist, more accounting focused. We have used, or I have used this in many of the webinars and speaking events that I've spoken at for related to quality management. But think of this as Sarbanes-Oxley for CPA firms. So back in 2002, when Sarbanes-Oxley came out after kind of the Enron scandals, that required firms to take a look deeply at their internal, or companies to look at their internal controls, do a risk assessment of, all right, basically what are your risks to your firm's for your company's business, and then design, implement, operate, and monitor internal controls to ensure that those risks are being mitigated. The exact same thing can be said for all these new quality management standards. It is a risk-based approach where firms are taking, what are certain quality objectives? How are they going to meet certain quality objectives for the engagements that they engage in? And how are they going to properly abide by any laws, rules, and regulations? So what are their internal controls, or we call them their policies and procedures, to be able to mitigate those risks, to not be in the news, being sued, being in court, and things like that. So that's kind of how I put it into plain English. What are your internal controls to help you as a firm, perform quality engagements and meet all the applicable rules, laws, and regulations. So hopefully that's plain English enough.
So I guess specifically talking about these types of rules and regulations, rumor has it there's 6 components plus 2 process pieces. Obviously, we're going to go into the assumption that those things will remain in place. What are those things that firms need to have on their radar? Are they different from just, your standard, you have to do annual CPE training or ethics training, you have to do your independence checks and such like that. But are there new things that are within these 6 components in these processes? But what are those things that firms should be having on their radar?
Yeah. So those 6 components and really those 2 other kind of process pieces as well that layer in. Some of it will sound familiar, but there's definitely enhanced and in some cases entirely new components that firms are going to have to keep on their radar. For the A&A and accounting folks in here, a lot of this will sound pretty familiar, but those components are things like governance and leadership, ethics and independence, your acceptance and continuance process, engagement performance, the resources you have in your firm, which again, there's some enhancements in those pieces as well. You also have information and communication. So external communications that you make to external parties, how is that kind of being reviewed, and how are you ensuring that those communications are done appropriately? And then really to speak to those two overarching process pieces as well, Brian already talked a little bit about, the firm's risk assessment process, which I would say is the biggest net new that firms are really having to deal with these new standards. And then also their monitoring and remediation process. And, I know Brian kind of spoke about the risk assessment process itself, but I would just reiterate in terms of getting away from the pre-existing kind of the legacy standards of, here is a checklist of the things that we need to do, and we do them, and that means that we're in compliance. This new risk assessment and this new risk-based approach is really forcing firms to look at where are the places that things could go wrong in our practice, in our firm, and let's design and address those risks in a manner that, makes sense for that underlying risk. So what is that nature, time, and extent of what we do? So, Drew, looking at your independence representations and those types of things is definitely still going to be a topic, especially, given the PCAOB space. But it really requires self-reflection on where are the risks of my firm, and, what are those highest risks? And therefore, I need to design policies and procedures to address those high-risk areas. It's not just this blanket, I have a checklist of 25 things that I need to make sure I do. It's really forcing firms taking that honest look at how their firm operates and designing, again, their internal controls to address those risks.
Now, just a little bit ad-libbing here. Is that just like updating a handbook with like, these are the new policies and you're just relying on people following those things, or is it, what's the actual like practice there? And I think I want to get into it a little bit later when we dive into the firms specifically of like what's being done, but just as like a quick little teaser, is there something actually?
I was gonna maybe add some color to what Connor was saying. To give an example, under the previous quality control standards, firms would literally take a quality control manual with what you said, like a checklist of items to do, and that checklist or that manual would look very similar, if not the same, for firm A that has 10 clients that are in the manufacturing industry versus client C who has a bunch of filers, foreign filers, staff overseas, just to name a few. So because their profiles and the way their company operates, the engagements they perform are very different, you would think that their quality control manual would look different. But under the previous standards, that wasn't the case. So we saw that, a lot under the previous standards. We see, the same off-the-shelf manuals, same policies and procedures for firm A and firm B, even though they're vastly different in how they operate. So that's just a little bit of color on that. And now firms really have to really understand, like, hey, I have a different risk because most of my staff are in China and India and the Philippines versus firm A has all their staff based in Irvine, California. Well, that creates a little bit different on how you supervise your staff, cultural differences, things like that. So that's just, a little bit of an example there, but that goes to show kind of the mindset change in the standards from old to new.
So part of that obviously is the taking these concepts, right, and finding a way to actually also apply it to the human element of it, right? Because people have to actually honestly fill out their independence reports, right? I'm kind of curious because I know, Brian, in the past you've done a lot of talking on the design versus full applicability distinction. I'm not even going to give you the chance to go down the road. This, I'm pretty sure I read, was rescinded. So I don't even know exactly what does that mean for everybody, because it seems like, okay, well, we're just designing these policies and these systems that are coming from regulations, but is it that everybody now has to do the full applicability, or what does that actually look like? Can you break that down?
Yeah, that's really one of the big pieces coming out of the proposed amendments. So under the originally proposed standard, they had this design only versus full applicability distinction, where essentially if you were registered with the PCAOB and just registered and you didn't actually perform any engagement, issue any audit reports under PCAOB standards, you still had the requirement to design a system under QC 1000. So a lot of firms were like, well, geez, that's very costly for us. Let's just deregister from the PCAOB, take our name out of the hat, and that way we don't have to spend the cost to design a system. As opposed to full applicability, firms that actually issued reports under PCAOB standards, did active engagements, obviously had to design, implement, operate, and monitor under the standards. So good news for firms is that, originally when the standard came out, firms started to deregister, and I think there was almost an opposite unintended effect of having less firms being able to do PCAOB audits, which I don't think promotes quality at all, because you're having the same number of firms doing the audits. So I think that was careful consideration from the board, and ultimately it's proposed to be rescinded. So firms, good news for firms. If you are registered and don't actually issue any reports under PCAOB standards, you don't have to design and have it on standby, basically. So good news there.
So one thing that I'd add, sorry, Drew, not to cut you off, but one thing I'd add is that is part of the kind of 9 proposed amendments. So that is definitely something that we feel will be kind of pushed through and enacted. But again, at this point, that is still a proposed amendment. And so something to just keep your eye on, especially if you're a firm that falls into that, potential design only camp.
So that was actually one of the questions that we did get in from one of the live viewers here. Is my firm doesn't currently lead any PCAOB engagement, so do we even need to worry about any of this? Obviously, what you're saying, Brian, is the design only thing has been rescinded. Do they? I mean, to be frank, I think a lot of people are thinking, well, do I even need to care about this at all then? Because is this firm level type of stuff where it has to just all be in place, or is it specifically, well, I only apply this quality control to the engagement? So I guess that's kind of a way to kind of rephrase that viewer question there. So do they need to worry about this at all?
I mean, it depends on, that's the typical accounting answer. It depends. So it depends. But, from a design only perspective, if you're not doing any PCAOB engagements, then no, you don't have to worry about it. I think if your intent is your firm wants to stay registered, but does not intend to actually issue any engagement reports in the near term, then it's something that you don't have to worry about, right? But as soon as you start to consider getting back into actively performing engagements, then yes, you should start to consider it. And I believe they put in some requirements about the timeline of, if you start to, once you issue your first report, then you have X amount of time to implement the QC 1000 standard. So Drew, you said it at the top of the show that I memorized it. I haven't memorized the proposed amendments, but I know there's something built in to say, hey, there's a certain timeline that you have to implement QC 1000 once you issue kind of your first engagement.
So this would be only applicable to firms that are auditing public companies, because I know there's a lot of firms that I think just steer clear of the PCAOB altogether. I know a lot of firms that I personally am connected with and are friends with, and a lot of colleagues who I used to work in audit with who now have their own practices, mostly focused on like tax and advisory, but every once in a while they'll get, a not-for-profit or something that requires getting some sort of compilation or a review or an audit done. They're outside of the scope of this QC 1000.
Yeah. So if in the PCAOB space, if you are auditing or engaged with an SEC filer, or you are engaged in auditing a registered broker-dealer. So broker-dealers and SEC registrants puts you into the full, I think it's the full applicability of implementing, designing, and operating under QC 1000.
Cool. So, when it comes to the amendments that you're talking about, right, that have been on the table for comment, and I imagine pretty soon should have a solidified answer on. I know it definitely adds confusion on like the seriousness that a lot of firms need to take on this. And, when it comes to those updates, if we're starting with the structural ones, like rescinding the design only requirement, changing roles and responsibilities, rolling back the external QC function, is there a through line connecting those three, that type of movement? And I guess, does it just make it easier for these firms to have less that they need to do in order to get QC 1000 implemented?
Yeah, I think, maybe thinking about it holistically and with the new board coming into place, I think one thing stood out to me when I attended the PCAOB Small Firm Broker-Dealer Forum, the first one this year. I think it was in May or April in Chicago. Board member Calabria opened the forum, and he introduced himself. And what stuck out to me was that he is an economist by trade. And so he is the first economist, a non-lawyer or non-accountant, to be on the board of the PCAOB. And that brings an interesting perspective to things, because as an economist, he's looking at the cost benefit of everything that the board's doing. And, he said he's not there to try to change everything the board's doing, but really take a look at like what's the cost benefit to certain things. And so when you start to look at some of the things we were talking about on the design only requirement, the EQCF function, the biggest thing that came out to me was the cost to firms, right? So if you're a small firm registered with the PCAOB but not doing engagements, there's a big cost to implement and design a system and just have it sit there, right? And not really use it because you're not, making any money from doing PCAOB engagements. On the other side of EQCF, trying to hire or find individuals and a group of individuals to sit on this external quality control function as like an independent board, I'm sure that's going to be costly as well. And at the end of the day, the benefit, does it really lead to better audit quality, right? And so I think that cost benefit of does it lead to better audit quality or not, is at the heart of a lot of these proposed amendments. So, that's a good perspective to have, and it's not just throwing a bunch. Again, it goes back to what Connor led off the show with, is that there's taking a very different approach by the board and really hearing what key stakeholders, particularly the CPA firms, have to say on matters of strategic initiatives and regulating.
So, for the firms, do they have, in your experience, QC teams where it's people who are dedicated strictly to this function, or are they just kind of a conglomerate of a few different people? And I imagine it varies by size. If you don't have necessarily resources.
I was just about to say, I think we're going to say the same thing, Brian.
What's the answer, Connor?
I was going to say it depends, right?
Yeah.
Because I'm thinking about the operational changes here, right? And what it means for the day-to-day life for these firms, right? And I imagine, and I think just from experience, and maybe we've all sort of noticed this, the people who are listening now, maybe it's directly applicable to them. If you're a senior accountant at a firm, how much are you paying attention to this and kind of, tugging, or if you're a manager, are you tugging on the partners to be like, hey, this is something we got to do? So I'm just thinking where that onus falls and what QC 1000, both the implementation of it and rolling those things through, as well as then the amendments, which seem to make it a little bit easier on those teams, what this means for their day-to-day life, and if that team even exists and who those responsible parties are.
Yeah, I think, hate to say it depends as it relates to kind of who this falls onto, but we've seen it across the spectrum in terms of, hey, there's a dedicated QC partner at this firm and he has some delegates that he's able to outsource things to. Other teams, it's just who has availability and how can we kind of piecemeal this across the team. So, as far as these specific amendments and what really changes kind of for the day-to-day for those QC teams or partners or whoever it may be at the firm, I would just say one of the biggest potential amendments that will have that day-to-day impact, I think, is going to come down to that evaluation date proposal. I know Brian had previously spoken on it, but under the kind of existing QC 1000 standards, every firm had a fixed evaluation date. And so that meant that their entire calendar in terms of implementation and then ongoing operation and monitoring had to be built around that calendar. And so that posed a potential problematic issue for firms because they were operating on different standards, different quality management standards with different evaluation dates. And this really effectively compounded this overall quality management burden that some firms had. And so I think that change, and I know we've talked about it previously, is really meant to alleviate firms, but I think that really changes how QC teams are going to interact with these new QC 1000 standards, because they're able to have that flexibility and they're able to scale how they implement and operate their systems on a timeline that makes sense for them. They're not necessarily prescribed, hey, I have to do all of this by September 30th and then provide, formal QC, form QC to the PCAOB in December. I can, pick which times make sense for me, which I know was a lot of feedback we received from firms saying, well, if I'm prescribed this 7:30 evaluation date, that's going to land me right in the middle of my busy season because I have, filers during this window and our field work is going to be during that time frame. So I think that was a big change. And, as it relates to the day-to-day life, I think that provides the most flexibility for QC teams to be able to develop what their plan will be and actually put it on a calendar that makes sense for them.
Now, when it comes to that, is the QC team just like a small subset? I imagine, like, for everybody else who's got that, because inevitably somebody's going to be on client work whenever they decide to make their effective date. Obviously, maybe you try to do it when a majority are, have downtime. But does it even matter if everybody has that downtime, or is it just the people who are working on this? Is this only really applicable to those people who are working on QC?
And Brian, feel free to add color here, but what I would say is,
it depends.
The team that's in charge of the QC team at firms, they are going to be the ones designing, implementing, and operating these standards. But at the end of the day, everybody in the firm is subject to the spirit of those standards and what those policies and procedures are. And so one big component that I think QC teams really have to take into consideration and really plan out thoughtfully is how you communicate everything as it relates to QC 1000. What are the policies and procedures that me as a staff accountant within the firm, I'm not the one necessarily designing everything and figuring out what the risks of the firm are, but I need to be aware of, hey, here are the policies and procedures that I need to adhere to make sure that I am in compliant with our own firm policy. So at the end of the day, everybody's a part of it. Obviously, the QC team will be the ones kind of taking the charge, but they're going to be the ones in charge with cascading that information down so that everybody in the firm is following those policies.
Yeah, it sounds cliche, but everyone has a part to play from staff to partner if you're in the A&A practice. And, there's certain elements or components of each of the new quality management standards around information and communication and how that flows and how do you communicate changes in policies and things like that. So I think there should be, and it will be, a greater emphasis on communicating the importance of firm level QC, not just engagement level, to more junior staff, staff level, seniors, people in those stages that are, probably heads down doing the nitty gritty of each of the engagements. But, in order to have an effective system, they need to be aware of everything that's happening at the macro level as well.
So I just got this live viewer question came in. It's one of the, I love it because it's like one of those snarky ones. The only time I've ever gotten a comment on a webinar I was doing or a live talk show, somebody didn't like the fact that I said Karen too many times. I was calling people like, oh, who's the Karen at the firm? And they're like, that's offensive. And I was like, are we kidding right now? So this is, all right, I'll just read it, right? With all these changes...
Does this have to do with Karen?
No, nothing to do with Karen. But with all these changes, how will the PCAOB even enforce all of these? It seems like we could get away with just continuing doing what we're doing without needing to waste time and money on something that might change at any moment anyway.
Semi-snarky, but okay.
It kind of reminds me of, they're like, well... Could I get away with just like not filing my taxes and see, or just putting something else on my taxes and but I don't know, because the IRS has, I don't know if they still have the 87,000 IRS agents or whatever, but that's always this fear, oh my gosh, I just don't want to get audited. I'm scared of getting audited, and very few people actually get audited. But it's one of those things that's everybody's kind of still scared, they don't want it to happen to them. Is there a way to reconcile that or similarly over here?
Yeah, with the new board and some of the communications that we've heard, in particular when they first announced the proposed amendments, they did allude to in changing the inspection process, right? And so Connor mentioned that they launched Inspection Modernization Council, to look at ways how to change the inspection process. And the biggest takeaway so far from me is that they're going to shift from a engagement focused inspection process to a QC focused inspection process. So many of those who are watching or listening today probably know that when you get inspected by the PCAOB, they're going to come in, select a couple engagements, and then really drill down into those specific engagements. And then as a result, any findings that they have may result in QC deficiencies. So it's almost like a bottoms-up approach. But with a QC focused inspection process, you'd flip it on its head and you start to look at a firm's policies and procedures or their internal controls first. And then if those are designed appropriately, implemented, operating effectively, then you can use engagement inspections to corroborate whether the controls at the firm level are actually operating effectively. So it's a top-down approach, which makes sense because, think about how we do our audits, our PCAOB audits. We have to gain an understanding of a company's internal controls. And then based on our risk assessment and our internal control assessment, we can either rely on the controls and that'll reduce our substantive testing, right? Or it'll increase our substantive testing. So it's almost similar to the audit process, which makes sense and it's familiar to us. So Mr. or Miss Viewer, they are looking to change the inspection process. They've put together a council to modernize the whole thing. So if you are in that boat of, hey, I'm just going to pay the fine kind of thing, I'd be wary of that approach because the whole process is looking to be changed, modernized, and even I think they even said there's a pilot of this inspection level process or this QC inspection level process in 2027. So more to come on that, but that is a big exciting change from the traditional engagement level inspection process.
Yeah, I guess it's one of those sort of cost of doing business type of things. If you want to be in that space, and hopefully these firms are earning enough from those specific engagements that they should view it as being worth it.
Yeah.
Yeah, and I was just going to add one thing that I kind of briefly mentioned earlier is taking that wait and see approach. There's still other things within QC 1000 that you will have to report annually through Form QC. So having that wait and see approach isn't necessarily you just operating the way you have always and waiting for an inspection to come. You have to proactively now report to the PCAOB on an annual basis. So that obligation isn't going away. So just also throwing that out there as well that firms need to be aware of on that front too.
So I do want to get a little bit tactical here because we're coming towards the end, and so I know I'm a hands-on learner, and I just feel like I find out a lot from seeing what's happening in practice out at the firms. You two have been everywhere this year between the forums, the road shows, the firm calls at clients and pass holders. So what's actually happening out there as far as twofold, right? The firms that you're talking to, where are they in this process? What's that spread sort of look like at this point? Because I know, Connor, we when we were at one of the conferences, we're just kind of talking to people, and no sales, just kind of interested. What's the status that you guys have here? And I think it was kind of shocking to both of us to hear that some, even SQMS hadn't been, like, oh yeah, that was a thing that kind of happened.
Yeah, no, I would say it. The feedback we've received is almost, close your eyes and throw a dart at a dartboard, and that's kind of the spectrum of where firms are. And yeah, I went to Jersey City back in May, where the actual new chairman, I may butcher his name, he goes by Jim, but he spoke, and it was cool to see the turnout and the variety of firms that were there. It was technically a small business forum, but or small firm forum, but there were Big Four contingency there, alliance folks, just a whole gamut of individuals that were really curious to see what the board's direction was and hoping for any insights that came from it. I would say, in going to Jersey City and various other conferences and just the dealings with, the firms and pass holders that we do interact with, they are all over the board. Some firms that really took it to heart when QC 1000 was first, announced, they really hit it hard, knowing or under the assumption that no extension was going to come through. And so they were fully implemented even well in advance of December of 2025. And they were able to take that kind of additional deferral year as more of a trial run and a test run. And so a lot of the feedback we've received from those firms have been, they're able to see what works in their system, what doesn't, what processes they can, enhance, where can they really hone in on those high risk areas. And I think that's something that those firms just were able to put the resources and time into developing. I would say that's a smaller section of the population. I think conversely, we also saw a lot of firms that were very excited about the deferral that came through. And of that group, I think there was almost a split here where some firms took that as, okay, this is now, we got our kind of our one lifeline. Let's make sure not to waste it. And they started the design and started to implement on their own. However, there are still some certain firms, and there's still folks that we talk to that haven't started, don't know where to start, and kind of feel overwhelmed. So I would say we've seen it all across the board in terms of, firms that have almost been operating these standards for multiple years now versus firms that, hopefully they're on this, so they're learning more about QC 1000, but they may not even necessarily have full appreciation for what the standards are at this point. So it's been all over the board. And I think that kind of goes to show how these standards are being rolled out, as there's a lot of differing perspectives, a lot of differing viewpoints, and there are folks at different points in that journey as well.
So I want to just even bifurcate down to there's those who've got it done, and then I think there's kind of like everybody else, right? Because there's the haven't started, as in I've heard about it, but I haven't even taken a look. And then there's and I still consider this in the same category. They're took a look, started to kind of do a little research, and then kind of dumped it and was I'll get back to that at some point. I want to start first with the firms that have fully built what's there. Just maybe one example of what's the story of how that's actually looking and how those kind of conversations are going. And then I'll pause and I'll go into the folks who have not gotten there yet.
Yeah, I mean, we've helped a couple firms implement, and they, we commend them for getting on board early on, and they were implemented even before the deferral was announced, right? And we had a couple firms that, even though the deferral was announced, we said we should just continue to move forward because we don't think it's going away. And that was our counsel to them. And sure enough, it's not going anywhere. So that was, kudos to them. And to Connor, what Connor alluded to was now they have a year to refine and to do a dry run, essentially, of QC 1000. So, they took advantage of that, extra year, not just to implement, but to operate and to monitor, make adjustments before they officially have to report on an annual basis on Form QC to the PCAOB. So, we were in this, we don't know yet stage. And so we kind of stuck to our guns saying this is not going anywhere. And those firms can definitely see an advantage in terms of, they move the work ahead, and now they're basically in operation and monitoring stages.
That's got to, I imagine, just feel like one of those good weight off the shoulders sort of situations. It's when you do something because you think it's about to happen, and then you have it, and it's oh, actually, we don't need it yet. And you're well, at least I'm done with it, so I don't have to worry about it later. That's how I feel when I make a video and then it's got to get delayed to get posted. I'm oh, sweet, I got something sitting in the inventory, which is always kind of a good feeling to be able to do that. So now, when it comes to the ones that haven't started or they're kind of early on and maybe a little stuck, I mean, is the solution that they do just to to assign it to somebody and just say work on this full time, or what are those conversations? Because is that just, or you just hire somebody and I don't know, does a role exist where somebody's like, all right, you're going to be 50% client work facing and 50% QC manager? Like what does that look like for a firm?
Yeah, I will make this story obviously anonymous, but one firm we talked to where he was audit partner charged with implementing QC 1000 was telling us that he'd wake up at like 4 or 5 a.m. every day before he had to get his daughter up for school to work on QC and SQMS implementation, and then get her up, go to school, and then pick up his normal A&A, audit partner day job. And we were just like, well, that doesn't sound very pleasant. That's the reality of the situation of, not getting started early. Right now, firms have to make that decision. It's going to be a cost, right? And so whether it's going to be the opportunity cost of pulling a partner or a senior manager or director from a client billable role into a non-billable role, which is QC 1000, implementing your system of quality control, or going out and looking for external help. That's going to have a cost too. So either way, there's going to be a cost to it, whether you want to take it internally as an opportunity cost or externally as, an investment. I think it's going to have to be made because it is time consuming. Like, there are hundreds of pages of just, the standard practice aids. The PCAOB has, put out a bunch of materials, videos, practice aids. Just to read those alone is, I don't know how many hours, but just to read and then understand it and going back to read it, that's, not a unsignificant amount of hours for an individual to be able to do that. So, the time is ticking. I think that's what you said at the top of the show.
That's one of those things that makes me, just the thought of having to do all that is just like, just take care of it. It's almost like I'm looking away, just like pull the splinter out, or just fix the arm, and you just like look away, and just somebody who you trust just
pull the Band-Aid. Yeah,
that's right.
All right, so I do want to get wrapping up here because we are nearing the top of the hour, talking of countdown. So if there's one thing though from each of you that someone remembers from this episode, what is that thing that you'd really want them to take away? Connor,
I'll go first. I'll go first. I think the thing that I would leave you is QC 1000 is here, and I know I've said this before. It's here. It's not going away. So, I think the way to think of it is, the deadline is there. The rules are there. The playbook exactly on what those rules are may be changing slightly with some of these proposed amendments, but at the end of the day, these are going to be rules and standards that, PCAOB registered firms, and especially those that issue filers or work on engagements with filers, are going to have to adhere to. So I know there's a lot of, back and forth in terms of who's at the PCAOB, who's not. Eliciting external stakeholder, insights, these amendments that we discussed, all that's kind of up in the air. But I would say the one constant within here is these standards are here, they're going to stay, and we know what the implementation date is, which is December 15th, 2026. And, with that information, depending on where you are in your journey, you'll have to, operate under that truth, basically. So that's the one thing I would make sure that folks are know from, this chat.
All right. And Brian, what do you want to leave the viewers with?
I guess jokingly, I was going to say start early, but now we're in July and you have less than 6 months. So I guess that may not be funny to some people. So maybe I'll change it up and, just taking a lesson. We didn't talk about even the ongoing monitoring or operation. We were talking about implementation, but taking a lesson from SQMS and what we've seen there is that, this is the foundation of your A&A practice. So we've seen firms really take advantage and not just see it as a compliance exercise, but a transformational exercise for their practice. It's the foundation for it, and it's able to scale and to grow their practice and to be more efficient while producing better quality engagements. So I wouldn't say I would say don't stop at implementation, and really the heart of the standard is that ongoing monitoring and that ongoing evaluation. So don't just consider implementation and you're done. Really take it to heart and see it as the foundation to be able to grow and scale your practice.
This is a message to every audit partner. Do it now. All right. Well, huge thanks to Brian Yujuico and Connor Crow for spending an hour proving that the PCAOB rulemaking can be entertaining and it's not mutually exclusive. So I've had my AI assistant producer running in the background here, and it's giving me this as the bottom line recap. December 15th, 2026 isn't moving, but the rulebook you're building toward might look a little different by the time you get there. So build for the standard as it stands today and build enough flexibility to bend, not break, if these 9 changes land as anticipated. We started talking to firms about QC 1000 years ago. Some of you got a jump start. Most of you let it fall out of the news cycle. And this year, the conversation picked back up. And then everything else happened and it got pushed aside. So now the clock is actually running out, as you've heard. So that's exactly why we're here, to tell you one more time. If your firm needs a hand figuring out exactly where you stand, that's what CPAClub does. I mean, these guys right here proved it to you all. They know what they're talking about. Get in touch. Chris, if you're watching this from a cafe somewhere in the Alps, this one's for you. We'll see you guys next time on Qualified Opinions.